Hello everyone and welcome to this Saturday morning educational presentation. If I could only use one trading tool, this would be it. Now I've often asked that question by members and other traders I know around the world that, Steve, what is your best or favorite tool? Now it's not so much in terms of being something that is favorite or of my liking, but it's something that has worked for me going on 4 decades now. And the reason I say this is because of some statistics I'd like to share with you to open up today's presentation. For example, it is a fact that 80% of all traders will ultimately lose money. And when I say lose money, I'm not talking about going into a drawdown or some type of slump or a series of losses. I mean, basically lose all the money that you have set aside for trading, your trading capital. It's also a fact that 15% of all traders will ultimately break even. So you put in a lot of hard work, you go into a lot of classes and webinars, you read a lot of books, you spend a lot of money on education, but ultimately after your hard work, you really have nothing to show for it. You're just basically treading water. And then lastly, this means that only 5% of all traders are consistently profitable. So we have a fairly good sized crowd today. If we're imagining that we have 100 people in today's class listening to me speak today, that means that 80 of these traders, 80%, will ultimately fail, lose all their money. 15 will only break even, and 5 of the traders listening to me today will be consistently profitable. Now, if you want to see what that looks like on a scale or a pie chart, you can see that right here, this large portion in red is the percentage of traders that will ultimately fail and lose money. This portion in blue right here is the traders that will break even, and this small green slice here, not even a slice, basically a sliver, represents the percentage of traders who will consistently make profits. So we have to ask ourselves, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? Now, if there's one thing I've learned over the 40 years I've been trading, it's that there is enough for everyone to go around. I know a lot of traders like to look at, that's a zero-sum game, that for every win there's a loss. But the way I look at trading is that it's just a huge, humongous ocean of never-ending profits. So if the markets are really like that, why is it that there's such a small percentage of traders are able to capture it on a daily basis? Well, it really isn't that difficult. In fact, it's actually simple. If you look at it, the traders that are consistently profitable are on the right side of the market. It's nothing more complicated than that. In other words, they're buying when they should be buying and selling when they should be selling. Go back and look at your last history of trades here, maybe 10, 20 trades. Most of the time, the reason why you lost is because you were doing the opposite. You bought something and it went straight down, or you sold something and it went straight up. So that's the tool I'm going to be talking about today. If I were stranded on a desert island, this would be the tool that I would use. This would be the only one I would be offered. And I'm going to show you exactly what it is today and how simple it is to access today as well. And I really think this educational presentation, it will increase your odds for consistency tremendously. So welcome. This promises to be a great Saturday morning presentation. My name is Steven Primo. I am the president and founder of Specialist Trading. And as you've just seen, we are all about educating you. Our goal is simply to educate you as traders because, as I stated earlier, there is enough profit available on a daily basis for everyone to go around. So you never have to come in with this attitude like, well, someone made it today and I lost. There's not enough, I just have to compete with these guys. There's no one you have to compete with. The market is constantly giving you messages on how to be consistent. All you have to do is learn how to listen. And that's what we do at Specialist Trading. I've been trading for 4 decades now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist. That's where you get the name Specialist Trading. A specialist doesn't mean you're any more special than anyone else. It just means that you specialized in making markets. So if you wanted to buy or sell, you would call your floor broker and he would go to the trader who specialized in that particular equity. So I made markets. I specialized in those markets of roughly about 50 stocks during the crash of 1987 and the bull market that followed. I've traded just about every system or method you can think of. I've traded just about every environment you can think of, straight up, straight down markets, sideways markets. So in my 4 decades of experience, I know what works in terms of consistency and I know what doesn't. So that's my goal. Through Specialist Trading, I teamed up with ProTrader Strategies about 8 years ago. And all we do is provide our students around the world in virtually every state in the United States and over 100 countries around the world, all the things that have shown consistency through my experience. And we're just trying to educate you so that you can put the power back in your own hands. That's what we really want. We want you to make your own trading decisions, not so that you have to rely on some convoluted indicator that you don't understand how it works, or some trading guru who you really don't understand why he's buying or selling. You're just doing what he does. That's why traders fail. We want you to be in charge of your own trading. Now today, I'm going to show you how you can take advantage of this same tool that I use on a daily basis. But before we begin, we are required first by law to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of examples, a lot of charting examples, different markets, different time frames on how to use this tool, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So once again, we're required first by law to show you this. So as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. You may want to copy down our handle there, abbreviation for Specialist Trading. Every day I post different information in actually all markets, not just stocks, not just futures, currency pairs, even the Bitcoin. We'll show you a lot of examples that our strategies have generated signals on, and also little bits of wisdom along the way. So feel free to follow us on Twitter. Now, as I stated at the very beginning, we are all about educating you. The reason why most traders fail, once again, is because you put your confidence and you rely too heavily on an outside source. I know this from first-hand experience because that's what I did 40 years ago. My first year or two trading, I did the same thing. I was listening to all the gurus. I was waiting with bated breath on all the news announcements, anywhere from earnings to money supply to jobless claims. I had tons of indicators on my screen, and I was lucky enough to have a few mentors who were specialists themselves who saw that I was tremendously frustrated. I wasn't able to make any money, and they convinced me to let go of all these things that showed no consistency over the years and to focus on one thing, and that's the chart in front of you. And they basically told me that the chart is telling me everything I need to know. So there's no reason I have to rely on news. There's no reason I have to rely on some guy on TV or a chat room. I just have to rely on the sound education that they gave me. And once I finally accepted that and basically grasped those concepts, that's when my trading turned around. And I think it's because of this cornerstone that's allowed me to be trading for the next 30, 40 years. So this is what my goal is: not to trade for you, not to have you come to my site on a nightly basis to find out what to do the next day. My goal is to teach you how to trade with a specialist edge. You'll see in these Saturday morning webinars how we want to teach you specifically, and most detailed because we want to share with you how you can become a more consistent trader with our new PTS Primo Charting Platform. It took over a year to develop this with my sister site, Pro Trader Strategies, and we really feel so strongly that it is the one platform that teaches traders how to listen to the market. We've always been taught how to listen to some convoluted system. We've always been taught how to listen to some mentor in a chat room, but we've never been taught how to listen to the market, and that's what the PTS Primo Charts does. So all the examples I'm going to be sharing with you today are generated on our new platform. Okay, so before we begin, remember this is a class, so I love your questions, but as you see here, I'm going to be asking you a question as well. But most importantly, I want to take your questions at the very end of the presentation. This is a little bit different from other webinars you go to, because if we stop at every slide, we'll be here up until 3 or 4 in the afternoon for our Saturday afternoon. I know you don't want to waste that much time. So let's just go through the entire presentation. It shouldn't take that long, and then we'll reserve the end portion for any questions. Okay, the only question I will answer is the most common, and that is this being recorded? Yes, it is. We record all of our Saturday webinars, so if you have to leave early or if you have any technical difficulties, log off and then log back on. But if that still is not resolved, we will send you a link to this recording. Okay, so if you joined us late, we have a really good crowd here today. Please wait till the end to ask any questions. All right, so let me start off by asking you a question. What if there were a tool that was automatically designed to put you on the right side of the market? Remember, I stated at the beginning of the presentation that the reason why that small percentage of traders are able to consistently generate profits, and one of the reasons is because they're on the right side. In other words, when the market's going up, they're buying, and when the market's going down, they're selling. So what if there were a tool, rather than something that you had to use your discretion to try and figure out just by looking at the chart? What if there were a tool that could automatically do that? Wouldn't that be great? Well, in all actuality, there is. In fact, you have the access to it right now at your fingertips. It's called the buy-sell line. You've heard me speak about this before, and this is the tool I would not be trading without. If I were stranded on a desert island it would be the buy-sell line. And guess what? There's nothing you have to purchase. There's nothing you have to put together with a formula or calculate or upload. You have access to it right now because all it is the 50-period simple moving average. It's that simple. But let me show you how powerful it is, because most people have that and they say, yes, Steve, I've gone to your webinars before. I've heard you speak about this, but it's not working for me. Well, most people implement it and apply it incorrectly, because in order to use the buy-sell line properly, all you have to do is ask yourself this question before each trade. But you must ask yourself prior to pulling the trigger, and that is, where is price in relation to the buy-sell line? So if you're new to my presentations, you may even want to copy that down and put it on a little post-it and hang it on top of your computer screen. Where is price in relation to the buy-sell line? Now, it doesn't matter what method you're using. I don't care if you're using one of my strategies. I don't care if you're using one of your strategies. I don't care if your strategy is based on the full moon. It makes no difference. But when it generates a signal, whatever strategy you're trading, before you pull the trigger, ask yourself, where is price in relation to that 50-period simple moving average, the buy-sell line? And you'll only come up with two possible scenarios, because if price is above, then you will only be looking to buy. So if your strategy or system generates a sell signal, but price is above the buy-sell line, the 50-period simple moving average, I strongly suggest not taking it, because over time, you really will not be consistent. Sure, you'll have winners every once in a while, but just like the slot machines in Las Vegas, they'll give you this false sense of security that you're doing well, but over time, you will have nothing to show for it. Take it from someone who's done it before. It doesn't work. Over time, longevity is about being consistent, all right? Success is longevity, and longevity is about being consistent. That's what's enabled me to be here 40 years down the road. So not every trade I have is a winner. It's all about 2 steps forward, 1 step back. Now, if you ask that same question, and if price is below, then you will only be looking to sell, or else you'll stay on the sidelines. You won't do anything if you don't like to sell stocks or go short stocks or futures or currency pairs. Remember, this works on any market, any time frame, any direction. We may have a bias today of showing you a lot of stock examples, but you can use it on a 1,000 tick bar chart of the E-mini futures. You can use it on a weekly chart of the Bitcoin. You can use it on a monthly chart of the Australian dollar. It makes no difference. Whatever time frame or whatever market you're using, place a 50-period simple moving average based on that time frame, okay? If price is below, you will never be looking to buy. I don't care what strategy or multi-million-dollar system you have. If it gives you a buy signal below the 50 period, don't take it, because over time, you won't have anything to show for it. All right, so let's look at an example here. Here's a weekly chart of the spiders. That's the ETF that represents the S&P 500 coming into the end of October, okay? Now, looking back in hindsight, we see here that we've had a tremendous run up in the markets. We all know that, okay? And these are all weekly bars. And this is the way most traders always look at things. They go, boy, I wish I would have known. I mean, I didn't get long, or I didn't start believing in this until we got up to roughly around here. How would I have known that we were going to go up and be this strong of a market back over a year and a half ago? Well, this tool is not telling you how strong or how high or how long it will last. It's just telling you with each bar whether you should be looking for buy setups or sell setups. Because once we apply the 50-period moving average, we ask ourselves, where is price in relation to the buy-sell line? And we see here that we were above the buy-sell line with consecutive bars well in advance in April of 2016. So we knew, if we were looking at this just to give us some direction of the market, we knew in April of 2016, over a year ago, that we should only be buyers of the market. It's that simple. And you have access to this right now. You don't have to, I'm not selling you anything. You don't have to purchase this. This you can start doing right away. We're trying to educate you so that you can become a more consistent trader. How about if we look at an individual stock? Well, let's look at IBM in this summer. And looking at this in hindsight, you would have lost a lot of money trying to pick a bottom. But that's the way most traders trade. And that's the way I used to trade some 40 years ago. I would see something like this happen, and we'd have a strong gap down, and then we'd have like a doji right here, and then a bullish engulfing pattern. And I'd say to myself, well, everything I've learned and looking at the indicators, it's really an exhaustion gap, and we've been going lower And now that we exhausted here, now it's time to buy. So I'd buy, and then guess what? We'd have another exhaustion gap. And then we'd go sideways for a while. So you think like, well, I'm reading all the literature and the information, and guess what? All the institutions are buying this down here. This is major, major Fibonacci support. The institutions love it. The volume has picked up to the upside. So you buy and you hold on as an investor, and then lo and behold, we go lower, okay? This is the way most traders trade. You're buying when you should be selling, or at least on the sidelines. But how could we have known? How could we have known that IBM was going to be going lower? Well, you have the information easily accessible right now. You apply the 50-period simple moving average, and you ask yourself, where is price in relation to the 50-period simple moving average? Obviously, it's been below, okay? It's been below since March of 2017 here on a daily basis. So why would I buy here thinking that this exhaustion gap is going to work, okay? Why would I buy down here thinking just because the institutions are buying it that it's going to work? Why at all? Why not, instead of listening to those things that show absolutely no consistency, sure, they work every once in a while, but we're talking about consistency so that you can be trading 20, 30, 40 years down the road. Why not just listen to the source, which is the market you're trading? And the market's telling you it wants to go lower. All right, let's look at this example in CREE. All right, now this is a little bit more difficult because basically the market's kind of in a range. It's going sideways. Someone looking at this would say, Steve, there's really no direction here. We're kind of, maybe just in a range, and it looks like we're kind of rolling over. This is a large rolling top. So, the chat room I go to doesn't like this stock, so I'm going to stay away from it. All right. Once again, this is the way most traders make their decisions, by listening to an outside source. Let's listen to the source. The easiest thing to do is apply the 50-period moving average. First thing we ask ourselves is, where is price in relation to the 50-period? Well, coming into this scenario here, coming into September, October, we were below. So obviously we went lower, but nothing much happened, and then we kind of raised a little bit. Now we're going sideways for the next 3-4 weeks. And coming into October, guess what? We're flirting with being above the buy-sell line. Now, someone would say, well, that's not really enough information, Steve. You have to look at the earnings. You have to look at what's going on with the company. You have to look at the overall market. There's a lot of stuff going on with Korea. I mean, why would you even consider this? Well, because that's the only thing you should consider. What the market's telling you, that's the only thing that matters. And so what we have here is just a little bit of flirtation being above the 50-period moving average. Now, here's a rule of thumb. Look for at least 3 to 5 bars to close either above or below the buy-sell line before an overall trend is established. Because the buy-sell line tells us the overall trend, not the short-term trend, but just the overall trend. And so just because you have one close either above or below that buy-sell line doesn't mean that, okay, well, we closed above 1 bar, so now the overall trend is up. No, you need to have a little bit more consecutive action behind that. So look for at least 3 to 5 bars before you decide what the overall direction is. So as we see here, we have consecutive closes below, but at this point we start to have 1, 2, 3, 4, 5 closes above. That's all the information you need. Now, it doesn't mean that it's generating a buy signal. It's just telling you that we're not going to be selling this. I don't care what some guru says on TV or some institutional guy says. We are not going to be selling until I have 3 to 5 bars below. So now that I have 3 to 5 bars above, I'm going to start looking for structure, some strategy, some system to get me long if I'm interested in this stock. And that would have been the right thing to do because the market told you it's going higher, and look what happened later on, okay? We didn't know anything about news. We had no idea why this stock went up. We really don't care. What difference does it make? The only difference it makes is that you learn to listen to the market. All right, let's look at UA, Under Armour. Okay, this has been going steadily down for a long time. Someone looking at this would say, boy, Steve, I just keep losing. Every time it looks like there's a bottom here, it bounces, I get excited, and it makes a lower low. Bounces again, lower low. Bounces, lower. I mean, how do we know that there's so much pressure on this? I don't have any idea how to trade this. I keep getting, bottoming signals with my system that I paid 20 grand for, and it doesn't work. You can start using something for free today. All you have to do is apply the 50-period simple moving average. Ask yourself, where is price in relation to that? Obviously, we've been below for a long time on a daily bar basis. We knew well up in advance that you shouldn't be buying this. And every time there was a buy, or I should say a bounce, that was a signal not to buy, but a signal to sell. Every little bounce should have been shorted here. And you see how we have one close above, but then immediately goes back down. In order for us to go long UA or to look to buy for buy setups, we need 3 to 5 closes above. This is how simple this process is. So I'm trying to share this with you and to show you that this is the one tool I would not be without forever, whatever type of trading I want to do. All right, let's look at another example here because we're talking about consistency. This is not some miracle 100% $10,000 system that never fails. No, this is just a tool to make you consistent. Now, consistency basically means that every once in a while there will be small losses where it won't work. But it's not about that. It's about being able to recoup and get back on track. Let me show you what I mean here. Here's Merck, okay, coming in September into November. Now at this point, we have a total of 5 closes above. So this is telling us the overall trend is up. And the stock went up coming into October, but then started to fade. It's still above the buy-sell line, but there's really not much action here. Now we're not saying, once again, that you would have bought, but let's say your strategy, your system generated a buy signal somewhere down here, thinking it was a pullback, and you said, well, Steve says it's above the 50, I should buy, and it really didn't go anywhere. All right, you got stopped out with a loss. That will happen from time to time. That's perfectly okay. I'm not going to sit here and tell you that this works 100% of the time. I said from the beginning, it's all about consistency. 2 steps forward, 1 step back. Now, had you been stopped out in some trade with some signal that was generated, all right, that's okay. But then what happens later on coming into the middle of October? We have an area here where we're flirting with a lot of prices closing below the buy-sell line. In fact, we have a total of 9 bars. But the stock isn't doing anything. It's just basically going sideways. Now, someone who doesn't know how to listen to the market would say, boy, we're making a really nice base here. The market is really trying to hold, and I think we're just going to bounce up like crazy. But someone who's listening to the market would say, no, this is the market screaming. It's not just telling us, it's screaming that it wants to go lower. And then ultimately, the stock fell 8 points in 1 week. Okay? This is how I always tell you the market is telling you in advance what it usually wants to do. It's probably about 70 to 80% of the time. That 20%, sure, it won't work, but that's okay. It's about consistency. Now, a lot of you I know are saying, well, yeah, Steve, I'm sure it's okay for these examples you've given, but in the grand scheme of things, this is really not that important, right? I mean, I can't imagine having this as the most important tool to use, the one tool I would not be left without. Well, let me show you some more examples here and show you how important it is. Once again, this is on our PTS Primo Charting Platform. This is a chart of the Dow, daily bars of the Dow, okay? We've been going much higher in the Dow, and then we've started to slack off a bit here in this example. Now, it looks familiar, making new highs and then kind of having a little trouble. The only trouble is this chart is of October 1987, all right? This is a good 30 years ago. So let's show you how this could have helped you 30 years ago during October of 1987. What you want to do is apply the buy-sell line. As we can see here, this entire time, telling us that the market was okay until we got into September of 1987, and we started to flirt and oscillate above and below the buy-sell line. Remember that rule, 3 to 5 bars either closing above or below. And oftentimes you'll see scenarios like this where you have 1, 2, 3 bars below, but then you go back above. But here were the red flags. There was no ability for price to sustain itself above the buy-sell line. In fact, a week or two later, we had numerous closes below, all right? And then we bounced back up above for maybe 3 to 4 bars, and then we had 3 more closes below. So this is the market telling us that it's having a little trouble here, and there are more closes below than there are above. Now the market really hasn't fallen out of bed yet, but if that's not a red flag, I don't know what is. So if you weren't convinced that the market wanted to go lower, the best thing you could do is raise your stops, or at least maybe sell half your positions, or get out of the market entirely until you have a clear idea. Because look what happened just days later. The crash of 1987, all right? I was on the floor when this happened, and it was crazy. And I know now the market was only down roughly about 500, 550 points that one day. But that would be comparable to a one-day market drop of 4,000 points today. Can you imagine if the market was down 4,000 points? I mean, it'd be the end of the world. That's what it was like 30 years ago. Now people would say, well, you know, how would we have known? How do we have known that crash was going to happen? Well, it was staring us in the face right there. It was that easy to spot. So that's how important this tool is. Now I know a lot of you you're not as old as me, so you weren't trading during the crash of 1987. Well, let's look at another chart here. Here's a weekly chart of the spiders. Once again, the ETF that represents the S&P 500. These are weekly bars. And someone say, okay, well, this looks familiar. Well, not really, because if we look at this chart here, if we look at the dates on the bottom, this is January of 2008. Okay, this is almost about 10 years ago. Now, once again, coming into this chart, we're above the 50-period moving average. We're doing all right. We start to have bars below, but all closes are still above. So that's still a very good sign. And then we make a new high here in October of 2007. But then look what happens. We have the series of closes below. We have 3 closes below, and then followed by a couple of more closes above, and then we have 3 more closes below. So the market once again is giving us warning signals. It's telling us it's having a little bit of problem here. This is your chance either to get out of the market entirely. This is your chance maybe to raise your stops, maybe sell a portion of your long-term positions, or if you're an aggressive trader, this is your chance to start looking for shorting setups. Because we all know what happened in 2008. That was the beginning of the 2008 financial crisis. That was the last tremendous downward move we had in the market. A lot of people were caught off guard. They couldn't believe this. They said the market was going up tremendously. How did we know this was going to happen? Well, how did I know? Because the market told me. The market told me in advance and all of my students to get out. So this is how important this tool is. Even with all this evidence, even with all this information I've just given you in the last 20 minutes, how simple it is to listen to the market. Students of mine that have been students, you know, their eyes light up. They go, boy, this is phenomenal, you know, and I don't have to spend anything. I can start using this on my trading. I can use it on intraday. I can use it on investing. This is great. And they'll get some really nice results using this by being on the right side of the market. They'll get some nice, consistent results. And then all of a sudden, you know, they'll go to a webinar or they'll hear about this miracle system where it picks tops and bottoms, and then they'll forget all about it, because that's the way traders are. You know, you love something, and then the minute something comes out of the blue here, you kind of forget what got you there in the first place, and you start grasping for that holy grail. So go back and research your last 10 to 20 trades. I can almost guarantee your losses were due to the fact that you were out of sync with the buy-sell line. Go back and look the last trade you had the last couple of days. I almost guarantee you were out of sync with the 50-period simple moving average. Even with that evidence, I'm sure most of you, if you were presented with something that gave you perfect tops and perfect bottoms, that went back and researched it 100 years and it would never failed, you would stop using the buy-sell line. This is what we do as traders because, well, it's a little bit too hard to remember to always have the 50-period up there, and I like to keep my screen clear, and you know, I only like to have up and down arrows. So this is what I developed with Pro Trader Strategies. This is a new feature we have. We call it our fluid feature on our new PTS Primo Charting Platform, which makes it easy for you to not even have to think about what side you should be on. All right. The beauty of the fluid buy-sell line is that it not only tells you the overall direction of the market, but it tells you its momentum as well. So you know if there's a lot of velocity and momentum behind it, or you know if it's kind of a flat market and you should be on one side or the other. Let me show you what I mean here. Let's look at this chart in GE coming into the middle of October, just a couple of weeks ago or 3 or 4 weeks ago. Obviously, we've been going down. In hindsight, it's safe and easy to see that you should not have been buying this, right? The only people that really lost money in this were people trying to go long, okay? You should never have tried to buy anything because, you know, once we add the fluid feature, all you have to do is click on the buy-sell line. Once you do that, you have a drop-down menu which gives you all these different options for viewing the buy-sell line. The most simplest one is the 50-period simple moving average. Let me talk about the fluid feature today. Once you click that on, it automatically will paint the back of your screen. You'll have either a reddish orange or a blue. You're only going to have 2 colors. And the way we made it simple for is that it automatically comes up like this, and you just have to use that old sailor's adage, red sky at morning, traders take warning, meaning that you shouldn't be looking to buy anything right now. Take warning if price is in the red background. Whereas blue sky at night, traders delight. If you have a blue background and price has consecutive closes there, well, that's traders delight because most likely we're going to be going higher. Now, also another advantage to this is that it shows you the direction of the buy-sell line. We have a very strong downward slope. So with this, you can see that there is a very almost a 45-degree angle slope to the downside. This means that there's a lot of velocity, there's a lot of momentum to the downside, and this is where you get these really consistent trading strategies that are selling the market because price is in the red zone. So every time we had a nice bounce here, as you can see, we went lower. We had a nice bounce. We didn't have 3 to 5 closes above. We came right back down. We bounce again, come lower. Bounce, lower. Bounce, lower. So that's where you had this really strong kind of master trend to the downside when you see that strong sloping, almost 45-degree angle. And there's nothing you have to do. You can just keep your screen at this color and it will automatically generate the fluid buy-sell line. Let's look at this chart in HBQ. Now, initially in the summer, the stock was going sideways, but then it started to take off. How could we have known that? Well, we click on the fluid feature and we see here that at this point we were below the buy-sell line, red sky morning, traders take warning. But until we got 3 to 5 closes above, right here, we knew that it was trader's delight, that most likely prices were going higher. We also saw that roughly around this point, we started to have this nice upward slope. At this point, we were still kind of going sideways to downward a little bit. Now we started to slope upwards. And look what happened. We pulled back right to the buy-sell line and prices took off. So when you have that strong upward slope, it's not guaranteed, but there's a high probability that you will have winning trades to the upside because the velocity is very strong to the upside. All right, let's look at that weekly chart of the spiders again. Remember going back to 2008. Well, all we had to do is apply the buy-sell line and the fluid feature. Once again, it's this simple. It's just a click away, and we automatically change the look of the charts. Now, we had some strong velocity to the upside, but at this point, we started curling over. Here's where we had the red flags, okay? So there's nothing you really have to think about. You can see it right there in front of you. And this was in November and December of 2007. We hadn't even started 2008, and that was the beginning of the 2-year bear market. And now you started to get that strong velocity to the downside. And look at this phenomenon that happens so many times. We will bounce right up to the buy-sell line and then go lower. Now, a lot of people say, Steve, this is great. Boy, I like this. But you know what? If a news event comes out, it supersedes everything. There's no way this can work in the face of any news events. Remember, once again, I told you, we're not promising the world here. We're just trying to give you techniques and methods that have high levels of consistency. There is nothing that works 100% of the time. If anyone tells you that, you should run. I've been trading for 40 years, and trust me, nothing works 100% of the time. So what you're looking for are things that have high levels of consistency. Now, sure, the buy-sell line many times can be opposite what the news is, and you'll be caught on the wrong side. That's okay, because I have seen in my own personal observations that many times the market tells you in advance what it wants to do prior to a news event being released. It's prior to the announcement. Let me show you what I mean here. This just happened just a couple of weeks ago. It wasn't even a couple of weeks ago, just last week. Yahoo Finance reports that Buffalo Wild Wings soars 25% on takeover talk. Okay, there are rumors about BWLD being taken over. The majority owner of Army's Carl's Jr. and Moe's Southwest Grill is reportedly looking to buy Buffalo Wild Wings BWLD for $2.3 billion. Shares of the chicken wings and sports bar franchise surged nearly 25% Tuesday on the news. So this is still nothing concrete, but it's a rumor that they want to buy. People say all the time, Steve, when rumors come out, they really manipulate what the stock's going to do. There's no way this buy-sell line can help us. Well, I disagree, because it can help you many times. It's not guaranteed, but it can help you. Let me show you what I mean here. Here's the chart of BWLD, Buffalo Wild Wings, okay? And here's when the news came out based off these rumors. Now, how could someone have known this in advance? Well, we're not saying you could have, but let's apply the buy-sell line, the fluid feature. Coming into this, we see this extremely strong downward move here. And here's the phenomena again where we touch it and then go lower. But what happens right here? We touch it again, and then we have a total of 1, 2, 3, 4, 5, 6 closes above. Do you think the market is telling you that the trend has changed? Okay. The trend has totally changed. So at this point, at least you're not short Buffalo Wild Wings, and perhaps whatever strategy or system you're using, you're looking for a buy setup. You know, as traders, we love to be victims. We love to say, boy, The big guys have all the luck. I had no idea about this rumor going on. But yes, you did, because the market was telling you. The trouble is we're always listening to outside sources. We're listening to chat rooms or indicators. The only thing you have to do is listen to the market. And the market was screaming in mid-October that we're going higher. So you had plenty of time to jump in if your strategy or system generated a buy signal prior to this rumor coming out. Remember, excuse me, as my mentors taught me, it took me a while to grasp, but finally, after 40 years, I've seen it's totally true. The market is always telling you what it wants to do. Our job as a trader is simple. There's nothing we have to calculate. There's nothing we have to overthink. There's no news events that we have to decipher. There's no support and resistance that we have to figure out what the institutions are doing. Our job is simple. As a trader, all we have to do is listen to the market, and then once we figure out what it wants to do, we just jump on board. That's it. It doesn't have to be any more complicated than that. The reason why traders fail is because they overcomplicate their trading by listening to outside sources. Once you learn to listen to the market, you're in for the ride of your life, because now you see trading is simpler, it's easy, and you feel for the first time in sync with the market instead of fighting the market. So let's recap before we go to question and answers. We talked about the buy-sell line. If I could only trade with one tool, this would be it. And guess what? You have access to it right now. You can start using it as soon as I conclude this presentation. Put a 50-period simple moving average on all of your charts. If you trade 1-minute bars, put a 50-period simple moving average based on 1 minute. If you have a weekly chart, place a 50-period simple moving average based on weekly bars. Don't try to overthink it. It's all it is the 50-period simple moving average. And then we showed you how to even increase your odds for consistency by not having to rely on make sure that you have a 50-period up there and make sure that every chart you look at, you have a 50-period. We've taken the work out for you by creating the fluid feature. It's all one click away on our new platform. It automatically will color the back of the screen either red or blue, telling you what side of the market to be on. That's all you have to do is look at the color, okay? So as we go into the conclusion here, I want you to ask yourself a question before you ask me any questions. Do you think these edges could have helped your trading this past year? Do you really think that, we're coming towards the end of the year? I'm sure most of you are nowhere in sight of where you want it to be. If you go back and look at this past year in your trades or your investments, do you think this could have helped you? All right. I think the answer will be undoubtedly yes. So here's the special we have for all the attendees today. For all of you taking time out of your Saturday morning to hear me speak, we'd like to give you a great offer. We're going to offer you our new PTS Primo Charting Platform. This is the educational portal that teaches you how to listen to the market. It took me over a year to develop this with Pro Trader strategies, but we're extremely proud because it makes everything so simple. For the first time, everything is one click away. All right, let me show you what's included in this though. This is all the education you're going to be getting in this special offer. We're throwing in our enhanced buy-sell line. This comes with 4 different features for viewing the 50-period simple moving average, the buy-sell line, all right? We just shared with you one of the features, but you have 4 different ways to view the buy-sell line. We're also throwing in our top-bottom 25% feature. I spoke about this a couple of weeks ago in a Saturday webinar, where this is a great way of listening to the market to determine what the short-term trend is. And we have that automatically set up for you. Once again, it's on our green strategy tab at the very top. Just click on top bottom 25% feature and it'll tell you what the market wants to do on the short-term time frame. We're not stopping there though. We're going to include one of our best strategies for pullback trading. That's strategy 3A. We're going to give you all the rules, and once again, click away, you will automatically be able to see where signals are generated. For example, remember we talked about BWLD, all right, Buffalo Wild Wings. Remember I said how traders love to be the victim, how they said, boy, there's no way I would have known about this. Only institutions make money in this kind of stuff. I never would have thought that would have gone up like that. Well, if you had heard this presentation maybe a month earlier and you had access to strategy 3A, guess what? All you would have had to done is come up to the green strategy tab column here, click on strategy 3A, and automatically you will be issued a drop-down menu. You click on the signal arrows, and guess what? A full week, I think about 8 or 10 days prior to that news announcement, strategy 3A generated a buy signal. based off of the rules you will learn in the class, okay, and coming with our platform. So you never have to be a victim. We haven't talked about strategies today. We haven't talked about adding any structure. All we talked about is the first phase in your trading, which is how to listen to the market. The second phase is to add some structure and to jump on board. Well, strategy 3A is a great place to learn how to jump on board. So you wouldn't have had to be the victim. You wouldn't have had to say, boy, I never get these big moves. Yes, you would have had the ability to potentially capture that big move had you had strategy 3A. But once again, we're not just stopping there. You're going to get strategy 3A with all the rules and the buy and sell signals. We're also going to include the signal scanner. We realize now that not everyone is able to be in front of your computer 24/7. So you have to work and you come home at night. Well, we make it simple to know what the setups are for the next day. This is how simple it is. Once you go to strategy 3A, for example, you could click on the scan tab and a window like this will appear. You click on load symbols, and automatically you will be issued 4 or 5 different symbol lists, anywhere from NASDAQ 100, S&P 500, top ETFs, and you can even formulate your own basket of stocks that you like to look at. Once you click that on, in about 10 seconds, the list of symbols will appear, okay? Then you simply click on scan, and in another 5-10 seconds, you will have a series of either green or red windows. This is just telling you that the correlating stock is generating a buy signal if it's green. The correlating stock is issuing a sell signal if it's red. And then once you get that, you have a list of the stocks that are set up for the next day, and you punch up the charts and the up and down arrows will automatically appear. That's how simple it is. This whole process probably takes less than a minute or two on a nightly basis. And remember, you can use it for every market you like. You can use it for currency pairs, futures, top ETFs, most active stocks. It's up to you. We're not stopping there. Once again, we know that a lot of traders like to tinker under the hood. They like to make their own strategies, or they like to, experiment. So we're offering 90 of the best technical indicators, the basic formatting indicators that are available for technical analysis, so you can experiment with different ideas. Now, we know we have kind of a technical bias. I know a lot of you like to listen to news or like to follow announcements. Even though none of that is required in any of our classes or courses, that's okay. We understand that a lot of people rely on those. So guess what? We've included Bloomberg TV. This is included with the PTS Primo charts. There is a special tab that's called our media page. All you have to do is click that on, and next to your chart, a media page will appear that will have live Bloomberg TV. So you can see all the announcements, earnings announcements, economic reports, jobless claims, anything you like, as long as it's coming up live, as well as updated performances on the market. This is included with the PTS Primo charts. And then lastly, we have great personalized tech support. If for any reason you can't access a chart, or you don't know how to get the signals for a particular strategy, we will have tech support reach you as soon as possible, and usually in less than a couple of hours you will have your issues resolved, and the personalized tech support will take care of everything for it. This is a great offer. We're giving you a 30-day trial for this. This is our trading educational portal that teaches you how to listen to the market. We're giving you 30 days to decide if you'd like this for only $7. Okay, $7, you get everything I just spoke about and even more that I didn't have time to go over. 30 days for only $7. And once again, as I often state, you probably spent more than $7 alone yesterday in commission costs. We're giving you 30 days of access to our Primo charting platform for only $7. So here's how to take advantage of this great offer. I'm going to leave all this information up here before I answer your questions, but contact my sister site, Pro Trader Strategies. You can email them, call them directly, or this is the link that takes you to the $7 deal. Now that link is not live, but if you look on the chat box in the far right hand corner, there is a live link posted under the chat box. So you can click that on. It will automatically take you to the $7 sign up page. And remember, once again, if you have any difficulty doing this, you're not sure how to access it, you can contact Pro Trader Strategies, call them, and they will, no charge, just answer any question you have. There's no obligation, and they will set you up with that $7 offer, okay? I'm going to leave this screen up here once again while I open up the question and answer box. Thanks for taking time. RG asked, does this work with futures and day trading? Yes, it does. In fact, I use all of the things that are accessible on the PTS Primo Charting Platform with day trading. I mainly have focused on day trading myself now because of my schedule and because of webinars I'm giving. I can't watch stocks that much and give them the attention, but I can, if I have an hour or two, I will day trade. So I use everything that you see here, the buy sell line, all of the different features in my personal day trading. Yes. Remember, all of our tools, all of our methods, all of our strategies, all of our techniques can be applied to any market, any time frame, and any direction. So that's the beauty of all this. If you are a trader, say, well, Steve, you showed mainly stocks. I trade futures, or I trade currency pairs. That's okay. I'm sorry I didn't show you some examples, but if you trade the Bitcoin, I know there's a large amount of interest in the Bitcoin. Our methods work fantastic with a market that is fairly new. Okay, so it doesn't need to be a stock or a monthly chart. It can be something that is fairly new in the markets that people have just started trading. It can be commodities. Makes absolutely no difference. Okay. Now people are asking whether this works on ICE or Winnipeg and Canadian stocks. I believe it does, Brian, but that's more of a technical question that you should probably contact ProTrader Strategies. Okay. Because since I don't trade those markets, and they would know more about it than I do because they're in charge of all the access and the setting you up and the tech support. So they could answer that question over the phone or if you email them. And remember, if you have more questions once we've concluded, there's absolutely no obligation. You can contact ProTrader Strategies. They'll answer any question you may have. And there are trading consultants manning the phones right now. They would be happy to answer any question. And there's no obligation. But trust me, for $7, I don't think you are going to be risking much for $7. If you went out to lunch today, you'd probably spend more than $15, even at a fast food restaurant for two. So for $7, you're getting 30 days of information that's taken me 40 years to accumulate. And it's all there, easily accessible, and there's no obligation after 30 days. Most of our new members who have decided to come on board try this for 30 days and then say, boy, this is amazing. I want to stick with this platform because it's helped me so much. And everything is so simple. One of my pet peeves is I really don't like complicated things. And that's one of the things my mentors instilled in me. They said, keep things as simple as possible. That's one of the basic tenets of a successful trader, in that their methods and their trading style is extremely simple. If you look at the traders who've been trading for a relatively short time, 5, 10 years, most of their methods, most of their strategies or systems are extremely complicated. There's rules in there. There's too much convoluted indicators. And a lot of times they're based on things that you have no understanding of. But if you look at the traders who have been trading 30, 40 years down the road, most of their trading techniques have maybe 5 rules at tops, maybe use only 1 indicator. That's the way trading should be. And that's what we've done with the ProTrader Strategies Primo Chart platform. It's extremely simple and easy to use. People are asking if we decide to stay on after the trial, how much is it? I believe the price is less than $97, but you would contact ProTrader Strategies. Once again, that's their department. It would be like $97 a month for all the same information. But we have people staying on tremendously because they're that happy with it. But once again, you have 30 days to decide for yourself. And after that, there's no obligation. It's up to you. But you can't afford to not take advantage of $7. I mean, really, $7. You go for Starbucks to get a cup of coffee. Some coffee I know is much more expensive than that. So in closing here, remember, the market, just like my mentors taught me, the market is always telling you what it wants to do. The trouble is, as traders, we're always taught really never to listen to the market. We're always taught to listen to this trading guru, the next hot guy who's really good on TV or CNBC, or we're always taught to get that master system that somebody just came up with that costs $10,000, or we're always taught to go to a chat room to listen to what everyone else is doing. But you see how we're never taught to listen to the market in front of us. That's why most people don't know how simple trading can be. So once you learn how to listen to the market, that's when you're in for the ride of your life. That's when things start to come together for the first time. That's how it worked for me, and that's what has sustained me for 40 years, and hopefully it can do the same for you, okay? I hope you got some education out of this presentation today. I want to thank you so much for attending, for taking time out of your Saturday. I wish you all a great week and a happy Thanksgiving, and I look forward to you all becoming students of mine at the new PTS Primo Charting Platform. Thank you so much. Have a great weekend. Look forward to seeing you next time. Bye-bye.